Every Forex trader is looking for the best entry strategy that does not require having multiple indicators on the chart in order to catch a huge profits. What if that strategy was always free and right in the front of you all the time? This video will teach you what I believe is the best entry point strategy that you can use in order to maximize your profits in the Forex market. When it comes to Forex trading, finding the strongest entry points or the optimum times to enter, trade and make money is essential. As a trader, I have spent a long time experimenting with various strategies in the hope of finding the best one that can allow me to make money. After a few hundred losses, maybe a couple of tears, coffee shots and
emotional, damn it!
I believe that time has finally come for me to finally share what I believe is the best entry point strategy to take those pips from the Forex market with no regret. So in order to achieve today's goal for the mission, I will dive deep into the details so that you can incorporate this strategy into your trading routine with confidence and ease. Please allow me to introduce you to what I like to call the power of three musketeers. This entry strategy includes a combination of a trend line, market structure, and a triple moving average. The ability to understand the present market structure is critical for us Forex traders, as it allows us to implement the most appropriate tactics and techniques based on the market moves in order to maximize our profits. So the first step in using this method is to find high time frame support and resistance, trend lines, and any other chart patterns. Trend lines, as well as other significant levels of support and resistance, should have at least 3 touches in order to be considered genuine market structures. And to be honest, if the trend line or any key level has fewer than 3 rejections, there is no way I will take anything less than that in order to be considered a strong zone. And once I am finished with the areas of sensitivity and the trend lines, I will add 3 moving averages to the chart, which are 21, 50, and 200. Some of you might be thinking, why do I add indicators at the end of my analysis rather than at the beginning? Because having chaos with indicators before proper analysis can lead you to providing false or misleading signals, and all of the indicators that you may employ are simply additional confirmations before your entry. I will now share an example of how I use this entry strategy to send a signal to our premium Forex group in order to make it more visually clear for you. On the right hand side, we have the AUD CAD monthly time frame. As you can see, I have identified a strong trend towards the downside with multiple rejections that indicated that every time the buyers tried to break it, they were totally rejected. In addition, my resistance zone is an important factor as well. As you can see from the several bounces, sellers are doing a great job by protecting their positions. Support, on the other hand, was constantly put to the test, but eventually failed and now serves as a resistance. So moving forward, on the left is a weekly chart. There wasn't much going on here, simply a good downtrend, which I also highlighted, as we will move to the lower time frame to see what's going on there. On the daily time frame, you can see that I have drawn a bearish channel trend line over here just to give me more detailed information. And my market prediction was like that more than likely I will see a push towards the area of a sensitivity before the market will continue its trend. In addition, I was also concerned that the CAD rate decision news would push the trade into undiscovered Forex horizons where I would never see it again and the trade would never turn out as I had to set it up. So to get my final confirmation, I will add moving averages to the chart and clarify how I found my perfect entry point on the 1 hour time frame. Keep in mind that each trader's entry preference can be totally different from what is yours because of their trading style and psychology. Some traders may not be able to manage early enters successfully because they like to wait for the momentum to break before they making a move. In other words, some traders find it more easier to trade a pullback because they feel more confident in their decision. So let's go back to the 1 hour chart for a minute. As you can see, I have my 21, 50, and 200 moving averages. They are on the chart and they are ready to go. As you can see, the moving average of 200 is above the price and functions as a dynamic resistance, which means that this specific moving average will react to the price movement as it progresses. So the 21 and 50 day moving averages served as the foundation for my entry point, and because I was using this strategy for a while, I knew that moving average of 50 must be trending above the moving average of 21. And all I was waiting is for the closure of the bearish engulfing candle to bounce off the both moving averages. Finding one of these possibilities in one of the currency pairs while you're scanning the market is what I believe will bring you the good fortune in trading. So as soon as I had a closure of a bearish engulfing candle bouncing off one of the moving averages, I entered the trade right away. To avoid being stopped out of the market too early, I put my stop loss around 80 pips, which is just over the resistance level, and I set my first take profit, which is around 20 pips. In most cases, I move my stop loss to the entry or near it while my trade reaches 20 pips in the profit. In that case, I lock my profits in while protecting myself from significant losses. So this is how the trade went down. As I said, I was a bit worried that the CAD news will basically skyrocketing this trade and I will never see it again, but what it did, it basically retested the previous area of a resistance. It reached my take profit 1, which is around 20 pips. Then we had a nice bearish engulfing candle, again bouncing off one of the moving averages. It actually broke the support again with a bearish engulfing candle, and this trade led me to profit around 103 pips before it reversed and bounced up the channel trend on a higher time frame. So if you enjoyed this video, don't forget to leave a like and a comment, and make sure to watch this video next because you don't really want to miss it.